already has a business, want to expand. So the bank is going to consider the profit part, or they can also look at the projection where they can say that I want to expand it and I want money for expansion.
When it comes to business loans, you can't always see it in black and white. It's always within that gray space. So, to answer your question, let's say I'm running a profitable business and it's doing great sales month on month, but the net profits aren't looking great.
Somebody is approaching you and they want to create these kind of projections for the future, looking at the past record. So are you also working with accountants who help the clients make these projections for the future?
Yeah, I generally work with a few clients or few accountants who are my clients as well. So I'm always happy to recommend them.
The existing debt affect the borrowing of the person? So if somebody has their own personal debt and or probably existing small business loan and they want to go all in and they want to expand, want to borrow more money, so how does that work?
Yeah, so it does come into picture. The bank first and foremost, the aspect for the bank is to make sure that you as a business owner can sustain it over a period of time.
Today's podcast is about celebration of the next big step what you're going to take in your career, and that is starting your own business, which is not going to be easy. And the one thing what you need to even start off is your capital, where you're going to start your business from. So, in this podcast today, we are going to ease out all the fears you might have, that where you're going to get the money from, how you're going to navigate the experience thing, how your business structure will influence your loan eligibility. If you ever had got into the trouble of repayments of loan and you have low credit score, then how it is going to affect your application, and the interest rates depending upon your profile. So we are going to touch upon all these points in this podcast. We have the financial expert Gaurav with us, who is going to help you understand the whole nitty-gritties of business loan and how you'll be able to sail through and have a strong start in the most crucial journey of your career, which is your business. So welcome, Gaurav.
Thank you.
So what are your views? How difficult and important is to have the right finances when you're starting off a business? You are a businessman yourself, so please throw some light on that.
It's of utmost importance. You need to have a very strong core before you get into any sort of business, especially in New Zealand, because it can feel like an uphill task. So you need to make sure that you're set up nicely for what's coming over to you over next few months, few years, and that's precisely where I want to throw some light on how we can navigate through it. What are the challenges that a business owner or potential business owner faces, and how we can mitigate those.
So when we talk about the business loan, the amount which they are going to get as a business loan, what are the ways they can use that business loan amount?
So first thing first, we need to establish what the purchase price is if you're buying a new business from scratch. I'm not going into the details of a partnership model yet, but if we just use a simplified example, you're coming forward to me and saying you want to buy an existing franchisee, you need 500K in business lending. My first question to you would be whether you have any deposit from that you can put from your end. And if the answer is no, then we kind of have to look at where else can we source that deposit, because there's highly unlikely that any lender would give you 100% of the loan against the business, because as you would appreciate, businesses are treated as higher risk categories than a residential property. So in that case, we kind of have to look at it in a wider context. What your overall portfolio looks like. Have you got any security in terms of a residential property? What sort of deposit you're bringing, whether that's coming from your house equity or hard cash. All these things have to come together before we start talking to the bank. So it kind of starts with an interview with the client to understand where they are,
Mm-hmm.
where they want to get to, and what tools have they got available in hand at the moment, and then we kind of work it out from there.
So can we understand it from an example point of view? So let's say we take an example that somebody is trying to buy a franchisee,
Yeah,
which is going to cost them 500,000, 500,000. So
yeah.
what is the minimum deposit they need to have in order to go to the bank and say, this much money I already have and this is the money I want? So what would be that basic requirement?
So that range depends on the type of business,
Mm-hmm.
your overall credit profile,
Mm-hmm.
as well whether it's an existing business or a brand new store that you're setting up.
Mm-hmm.
But by and large, that ranges between 30 to 50% depending on which lender you're talking to.
Mm-hmm.
That's something that you kind of have to manage yourself. And as I said, that could come from either hard cash or your house equity. So either works as long as the overall servicing works for you.
So, if somebody is buying a running business, let's suppose, and the business is generating 200,000 a year, so how much can they get the loan based on that existing revenue what business is generating?
Well, if they're doing 200K in net profit, then that's already a good start.
Mm-hmm.
But at the same time, that figure itself isn't sufficient enough for us to say yes or no. We kind of have to look at the overall liability picture as well, and whether you're working in the business or you're basically, a hands-off owner, but having an existing business experience and being able to prove that you are profitable just makes it a lot more easier for you to buy the next one.
So, if somebody have, let's say, lot of revenue, but very less profit, or somebody has less revenue and comparably higher profit. So which one will make more sense to the bank? Higher revenue or higher profit?
Which one do you think would make more sense?
For me, obviously, it is going to be higher profit.
Exactly.
But when you are talking about, let's say somebody already has a business, want to expand. So the bank is going to consider the profit part, or they can also look at the projection where they can say that I want to expand it and I want money for expansion.
When it comes to business loans, you can't always see it in black and white. It's always within that gray space. So, to answer your question, let's say I'm running a profitable business and it's doing great sales month on month, but the net profits aren't looking great. So then you would question why is that, and the bank would question that as well. So in that context, you kind of have to look at why there are such high operating costs. Could it be because you're doing remodeling, so it's a one-off cost, or you had to spend X amount to do advertising, but again it's a one-off cost. And if that is the case, then we can mitigate it by presenting the application or the explanation that this is not going to be a recurring cost. So your future profits may look better. And that's where, we call it three-way forecast come into picture. And what that means is your accountant can provide a forecasting model where we look at your overall profit and loss predictions for the future, along with your net assets and liability situation as well. So, in conjunction, the banks look at how strong your overall business model is, whether it's a one-off thing, or you can sustain that higher profit on year-on-year basis.
So when somebody is approaching you and they want to create these kind of projections for the future, looking at the past record, so are you also working with accountants who help the clients make these projections for the future?
Yeah, I generally work with a few clients or few accountants who are my clients as well. So I'm always happy to recommend them. But at the same time, if you have an existing business, then chances are you would have your own accounting relationship with someone. So by all means, reach out to them, and I can also liaise with them and make sure that the specific requirements are met from the bank's point of view. But I'm happy to recommend my own accountant as well, who's very switched on, very onto it.
And does the existing debt affect the borrowing of the person? So if somebody has their own personal debt and or probably existing small business loan, and they want to go all in and they want to expand, want to borrow more money. So how does that work?
Yeah, so it does come into picture. The bank want first and foremost, the aspect for the bank is to make sure that you as a business owner can sustain it over a period of time. So if your business is doing well but you're in large personal debts, then chances are that most of the profits you're funneling through to pay the debt off. And if it is unsustainable, then what's going to happen? You're probably going to struggle to pay it off, go bankrupt, liquidate completely. So all these aspects do come into the picture. And as a business owner, even if you ring fence your business under a limited liability company, you're still liable for your personal decisions and vice versa. So yes, the banks look at it from an overall picture point of view. I've got a client who wanted to buy a new franchisee. They didn't have any experience in that space, but they did have good, consistent income from their existing setup. In a lot of cases, that kind of becomes a hard conversation with the bank because the bank says you don't have enough experience.
Correct.
How are you going to sustain? But at the same time, if they've been earning, say, 400 grand every year from their existing business, then that gives them that safety net or that assurance that the clients have good financial acumen. They have achieved a level of sustainability in their business and personal financial journey, and then that could sort of give them even further boost in terms of running the separate business. So yes, everything is part of that overall picture that we have to look at, and at times our job kind of becomes gluing all those pieces together and presenting it in the way the bank wants to see it.
So let's say somebody has a full-time job already. They want to start something on the side. Will the bank be able to give them the loan based on their primary job, or they would need a deposit? Like the deposit has to be there. It's a must.
The deposit has to be there because it kind of gives them that assurance that you're putting some stakes into the ground. Otherwise, what would happen is you'll get 500 grand from the bank to run a business, but you're busy doing your full-time job and you're not being able to give it enough time your business, and you get into losses. Then what's going to happen? So then none of the lenders would really want to be in that sort of situation. So yes, the business requirement is such that you have to have some stake in the ground, i.e. deposit. But at the same time, you don't have to be an active operator in the business. You can be in a sort of semi active or passive capacity, as long as you can provide evidence and clear explanation that the business will run based on your employees and you can sustain it over a period of time.
Let's say it's a husband-wife combination. Both of them are the director. One of them is doing a full-time job, the other one is doing the business. But the security from the bank point of view, will that help that one of the director is having a full-time job, they have the deposit, and the other person is going all in? Will that help?
Yeah, absolutely. I mean, that in many ways is a perfect balance, because then on one side you're providing that safety net, that assurance that you have an existing setup, you are earning XYZ amount on month basis, you have a collateral against your residential property, and the wife or the husband is working into the business or is going to work into the business and sort of run it from there. So I think to me, in many ways, that's like the perfect balance if you're starting new. But again, it depends on lots of factors like how much is that.
So the next scenario which I want to discuss is about what are the criterias which can make your loan application decline.
Credit score, first of all, your personal financial acumen, how responsible you are as an individual about paying your debts, about keeping up with your repayments. That's first. Second, the industry experience. If you're buying, let's say, a McDonald's franchisee, Have you worked in hospitality space in the past, or you coming from civil background? How does that work?
Mm-hmm.
That's second. Third, I would say is, again, not enough deposit, because the banks would want to have some stakes from you as well.
Mm-hmm.
And the fourth one is not having a clear constitution in terms of who's doing what in the business, especially if it is a multi-shareholder scenario.
Mm-hmm. And if somebody else is the director with you and they have a bad credit score, will that also going to affect the application?
Yes, it does have an impact. So it gets scrutinized a lot more than usual,
Mm-hmm.
but it's not the end of the world. I
Okay.
think everything has to be looked at in context when it comes to business lending. There's no yes or no
Mm-hmm.
for any sort of situation. It all depends on, as I said, the overall picture and
Mm-hmm.
how we present it as well.
Perfect. And does the age of the business matter? Like how long you been in the business, or how old is the business which you are buying, or what are your projections for the future? So the bank would want a business plan, of course.
Absolutely.
Yeah.
Business plan is actually the thing that gets the job done for
Yeah.
me. It needs to be clearly articulated, your risk profile, your overall objectives, and your execution plans have to be crystal clear.
Mm-hmm.
And once you've been able to achieve that, then the life gets much more easier for you to explain this to the bank, and then for the bank to realize what exactly you're up to. So absolutely, business plan is an essential document, and in number of cases, that's where we come into the picture. We are the ones who sort of building it from block by block, and
Mm-hmm.
then presenting it to the bank on your behalf.
What are the key industries where the banks are most happy to give you the loans? Is there any specific sector, industry?
I think these days it's more around environment and sustainability.
Mm-hmm.
Different industries have different sort of risk factors. Hospitality, for example, if you're running a McDonald's or Subway franchisee, chances are you'll get the loan approved. But burger franchisees these days are getting scrutinized a lot.
Mm-hmm.
Construction industry isn't doing great either.
Mm-hmm.
So if you're coming to me, and I'm going to the bank and saying you need 3 million in construction lending, they will scrutinize like hell, because it's on a very shaky ground.
Mm-hmm.
There are a lot of successful business owners, but at the same time, a number of small to medium scale business owners are liquidating every single day. So it kind of goes in waves, and
Mm-hmm.
at the moment, I would say construction and hospitality are probably in a bit of a soft spot,
Mm-hmm.
whereas environment sustainability, or if you're running an IT consulting business, those sort of businesses always do well.
So let's say somebody wants to start a business. It's not a franchisee. They want to start something of their own. They have got the deposit. They have got the loan. Everything is there. They ran it for a year, and now because of their bad credit score in their previous application, their interest rate was little bit on the higher side.
Mm.
So what are the next steps? What they can do to minimize the load and increase the profitability? How does that can work?
So it could be for a number of reasons, as you said. Could be a credit score issue, or could be the fact that when they bought it, they didn't have any industry experience. But now, over a period of time, if they built any sort of substantial experience and profits, then the profile eventually gets stronger, and then I suppose we can look at refinancing that and restructuring that, because restructuring gives them a lot more leverage in terms of how they can free up some of the cash flow,
Mm-hmm.
as well as equity if
Mm-hmm.
there is equity in the business,
Mm-hmm.
and then that could help them with further expansion in terms of capital, hiring more resources, assets, or any of that sort.
Perfect. And does being a sole trader company or partnership change how much someone can borrow?
Not necessarily in terms of borrowing, but it's a conversation that I like to have with my clients, so that I understand what their plans are long
Mm-hmm.
term,
Mm-hmm.
and it's something that the banks would also want to know, because that kind of dictates how it's going to shape up in the future, especially in the expansion phase.
Mm-hmm.
So it's always a good idea to talk to an expert accountant as well as a solicitor and structure it really nicely before you get into any sort of lending conversations. And that's where we come in as advisors, and we look at how experienced or naive they are in that space. And first thing we do is just recommend them, advise them to talk to a professional, have a clear constitution in place, and then sort of look at what sort of liabilities you want to take on in terms of your business debt.
Perfect. So, Gaurav, what is the average brackets of business loan interest rates?
If you're talking main banks, then we're kind of looking at between 7 to 9%. And you kind of have to look at it from an overall picture point of view as well. The rates are rising as we speak. पिछले एक से 1.5 महीने में ही almost 0.5% rise हो चुके हैं rates.
Okay.
It's something that you can't control because that gets dictated by a number of factors, including the wholesale market. But as on today, I would say between 7.5 to 9%. Again, depending on the overall risk profile as well as the type of business you're buying. But काफ़ी बार क्या होता है कि आप qualify नहीं करते हो primary bank के लिए, or you don't meet certain criteria. So in that case, we kind of have to look at the non-banking options as well. उन cases में the rates look very high on paper. Right? Starts from 16%, can go as high as 25%.
Wow.
और काफ़ी बार ये क्वेश्चंस आते हैं, लोग पूछते हैं कि अरे it's a very high interest rate to pay. I said, yeah, but at the same time, if that allows you to get a foot in the door, and then you can sort of expand from there, then we can always look at refinancing you to a primary lender. So काफ़ी बार इसको एक stop gap solution की तरह treat करना चाहिए. And yes, on paper it looks very scary, but when you crunch the numbers, and let's say if you're paying 10 grand extra within next 12 months, and if that allows you to earn 50 grand, then what would you choose, right? So when it comes to businesses, as I said, there isn't always a black and white answer. You kind of have to look at what objectives you want to fulfill.
It's probably the ROI what they need to think of.
Yes, exactly.
So it's a race between time and money.
Absolutely. I mean, business is all about that.
Yeah, correct. So let's take another example. If somebody have been in the business and they started bootstrapped, no funding, no loan, nothing, and so first year, let's say they made a profit of 50K. Next year they made a profit of 60K, and third year they actually had a loss. So, but now since they have got 3 years of experience, will the bank be comfortable giving them a loan looking at the 3 years past record?
Potentially, depends what you need the loan for. If it is to expand the existing business, then certainly the losses in the last year will take the center stage, and a lot of conversations will be around why that happened. जैसे मैंने बोला कि काफ़ी केसेस में होता है कि आप एक्सपैंड कर रहे हो तो आपने आपकी ओपेक्स कॉस्ट बढ़ जाती है, and on paper you made losses, but in reality what you're really doing is setting yourself up for expansion in the subsequent years. So it's all contextual. वहाँ उन केसेस में we can obviously present it that way, but अगर आप genuinely sustain नहीं कर पा रहे हो और business is going to go in losses in the near future as well, और आपको दिख रहा है, तो उस केस में I think it's going to be very hard for you to take it to the bank. But at the same time, it shouldn't deter people from not
Trying.
giving it a try.
Yeah.
And this is exactly where they need experts like us. We can look at why that happened, why that shouldn't happen in the future, and why how the banks would look at it. तो वहाँ पे हम जो dots हैं वो connect करके we can try and get you the
So
funding you
जो
require.
बैंक होता है वो बैंक बिजनेस ओनर से बात करता है या आपसे बात करता है? बिकॉज business owner might be good at running the business, but might not be good at talking to the bank or explaining their situation to the bank.
Yeah.
So कैसे ये workout होता है?
हाँ, उसी सिनेरियो में हम लोग पिक्चर में आते हैं कि काफ़ी बार बिजनेस ओनर्स आर वेरी गुड एट व्हाट दे डू, but they're not good with accounting, they're not good with bookkeeping, they're not very proficient with how to forecast their business because they just head down sort of
Solving
walk into the
day-to-day.
business mentality people. तो वहाँ पे they require help from experts like us, from accountants, from solicitors. और यहाँ पे ही हम banks और clients के बीच में conduit की तरह काम करते हैं where we understand their picture, we understand their objectives, and we understand banks' concerns as well. And a lot of times it's about finding out how we can mitigate it and bring both of them on the same page.
So I just like while talking, I just got this example in my head. So let's say somebody started with the food truck business. So they started with one truck. They were profitable. They took a loan to open another food truck somewhere else. But since they were working in one store by themselves and they hired somebody else to run the second food truck, and that guy didn't turn out to be good, and that made them lose money. Overall, it is losing money, but the core business where they are working is still making money. Can they explain it to the bank that we can hire good people and then we can make it profitable? Like these are the kind of scenarios which can work out?
Yeah, we deal with such sort of scenarios day in day out.
Yeah.
Definitely explain कर सकते हैं.
जी.
But at the same time हमें client से भी एक honest conversation करनी पड़ेगी कि how viable is that, in end of the day you're trusting somebody else to run the business for you. So it kind of have to start from ground up, an honest conversation with the client. And if it is just a one-off incident, then yes, we can certainly mitigate it. और जैसे आपने बोला अगर वो bootstrap करके उन्होंने business run किया है अभी तक कोई debt नहीं है तो they already have assets with them, a food truck, all the equipments, all those things are considered the assets,
Okay.
Tangible assets that we can quantify. So already you have something
With you, yeah.
to put as a collateral.
Yeah.
And if you're only needing a small portion of lending, then it may be an easier conversation. But अगर आपका overall asset portfolio 100K and you're looking for 1 million, then it's a completely different ball game.
So कितना x leverage किया जा सकता है deposit को?
Generally वही है कि between 30 to 50% आप
अपना
आपको
रखो.
अपना एक बॉल पार्क फिगर लेके चलना ही पड़ेगा. Depending on the business risk profile and your overall situation, there are some lenders जो 30% पे करते हैं, कुछ other lenders हैं जो 50% मांगते हैं, and depends on the type of industry as well. Food industry, for example, if you're starting from scratch, so obviously the risk profile is higher. So the expectation is that you bring more from your side. But if it is an existing franchisee, तो 30 to 35% से भी हम इसको ओवर लाइन लेके जा सकते हैं.
So let's say कि business owner को चाहिए 300,000 और बैंक कह रहा है कि we can only give you 200,000. So is there a way we can bridge this gap?
Potentially, again, we can look at their asset portfolio if they have multiple equipments, tangible assets. So we could probably take lending against those hard assets itself. At the same time, we need to keep the bank in the loop because then you're taking additional lending and the bank has to be okay with it.
So Gaurav, with all your experience, would you like to share some case study जहाँ पर आपने लोगों को help किया है recently in getting their business loan approved?
I'll probably give you an example, but won't share the
Names,
the personal
yeah.
information. So let's call them Sandeep and Shagun.
Yeah.
Young couple wanting to grow. Existing setup. Both of them were working in IT. Husband is still working in IT, doing fairly well. The wife wanted to branch out and do something of her own, so she bought a fast food established franchisee last year. So I helped them with that. Initially it was a bit tricky because she didn't have any industry experience, but we could leverage their house equity, which they kind of have built over last many years. So they were in a very strong position financially, but it was just the industry experience that had to be mitigated. तो वहाँ पे हमने एक nice structured business plan बनाया, बैंक को present किया, provided all the the mitigants in terms of how she's gonna leverage her experience from completely different industry and use that to operate this business. And on top of that, what strengths and weaknesses the business already holds. तो वो बहुत सारा पेपर वर्क हमने पहले सॉर्ट आउट किया, अकाउंटेंट से कंसल्ट किया, वी गॉट द फोरकास्टिंग डन, एंड देन once everything looked good, we presented it to the bank. In terms of numbers, they were looking somewhere close to 500k. They already had around 200k to tap into from their house equity, so they needed around 300k more. तो वहाँ पे हमने पूरा एक कॉस्ट एनालिसिस किया कि कितना उनका रीपेमेंट्स बैठेंगे बेस्ड ऑन 5 years term, and the numbers were still stacking up. So for us, it was about presenting it with the overall picture, including their personal debts and liabilities. And in couple of cases, we had to have that conversation around why you need that credit card, because that's just eating into your overall servicing, right? So this is part of the conversations we have with the clients. Credit cards close kiye, car loan close out kiya, then that eventually put us in a further stronger position. और जब हमने बैंक को प्रेजेंट किया तो काफ़ी बैक एंड फोर्थ हुआ, जहाँ पे बैंक ने क्वेश्चंस पूछे कि हाउ वाइबल इज इट, हाउ सस्टेनेबल इट इज़. बट जैसे मैंने बोला, शी हैड अ वेरी गुड strong operational experience from a different industry, and she could leverage that and put that effort into this space, and the bank understood that and gave them the approval. And coincidentally, they reached out to me a couple of weeks ago, and now they're looking at buying the second store.
Oh, wow.
Because
Nice.
they feel like they feel confident about where they're at right now, and they want to expand from here on. तो यहाँ से अब next journey शुरू होती है in terms of expansion. अब वहाँ पे उनका जो existing business loan है वो भी consideration में आएगा, and they probably won't have the equity to tap into. But at the same time, because they're profitable, because they've done it in the past, that gives them a lot more weightage than just starting from scratch. तो अब हमें उसको टेलर दूसरे तरीके से करना पड़ेगा. उसका बिजनेस प्लान वुड बी स्लाइटली डिफरेंट. इट वोंट जस्ट बी ओके XYZ could happen. Now we've got an historical information from the existing running business.
Correct. Yeah.
And on top of that, she's going to be a full-time, operator into the business. So वहाँ पे she may be getting shareholder salary, for example, whereas the existing business owner wasn't working into the business. So naturally, you can take home more profits or salary, whichever way you want to look at it, and that gives you leverage over the existing setup. So again, different sort of levers to pull. But where we at right now, they already have an existing successful store, और अब उनको दूसरा एक buy करना है, and that's where I'm helping them out.
Perfect. I've got a couple of questions. So when you say that you use the equity for the borrowing for the business loan, so इस केस में क्या मॉर्गेज की जो पेमेंट्स हैं वो बढ़ जाती हैं? होम लोन की मॉर्गेज बढ़ जाती है इस केस में?
हाँ, बढ़ जाती है, क्योंकि एसेंशली आप घर की इक्विटी उठा के ये लोन ले रहे हो. तो जैसे कि अगर आपने 200k का टॉप अप किया है, तो दैट गेट्स एडेड इनटू योर होम लोन, राइट? सो it's good and bad, because then you're still paying interest on the 200k portion, even though you're using it as a deposit towards the purchase, but at the same time you're paying 4.5-5% interest on that, and that allows you to get into a business जहाँ पे आप 200k 300k profits बना सकते हो year on year basis, right? तो वही जैसे आपने पहले बोला था, it's all about ROIs. Your time and money versus your effort, consideration, and if that gives you multiple returns, then why not?
Yeah, absolutely. Perfect. So thank you, Gaurav, for sharing such valuable example and showing us the way that if somebody wants to take the next big step of their career, that they want to be self-employed, running a business, create jobs, and want to secure and multiply their value of time in terms of money. So that can be a good leverage to take, and everybody who is planning to do this financial advice, they need help where somebody else will take the pain of talking to the bank, running your finances, helping you consolidate your debt, or take you out of the debt, then Gaurav is the guy who can make that happen for you. Cool. Now let's do a little bit of rapid fire.
Mm-hmm.
So you just need to answer in yes or no.
I'll try.
Yeah. So 2 years in business, can I apply?
Yes, absolutely.
No property security, can I still borrow?
Yes, hard, but definitely possible.
1 million turnover automatically means good borrowing capacity.
No,
Bad credit means automatic decline.
no, never. Can always give it a shot.
Can a sole trader get business lending?
Yes, in certain cases, but not the preferred option.
Can I use business lending to buy equipment?
Yes, absolutely.
Can existing debt reduce my borrowing capacity?
Yes, absolutely.
Can I refinance existing business debt?
Yes, definitely possible.
Can I apply to multiple lenders?
Yes, yes, you should.
Is the cheapest interest rate always best loan?
Never.
Thank you, Gaurav. So get in touch with him. There is a link in the description. Click that link, and Gaurav will be more than happy to help you with the entire process. Thank you for watching, and we shall see you in the next one. Till the time, you guys take care of yourself. Bye bye.
Thanks, everyone. Thanks, Chakit.
Thank you.